The 24th of August 2020. I think it's only about 16 weeks to Christmas. Business Insights is a very exciting webinar series hosted weekly on Mondays at midday by a panel of industry thought leaders for business owners who simply want to be in the know about the latest and most significant news and initiatives in the Australian business landscape and how that impacts the way they do their business. Our panel of advisors aim to inform, educate and provide strategic insights to the changes in the economic, legislative and financial landscape that affects small business. We aim to guide our viewers to navigate business challenges through COVID-19 and beyond. Of course, the official disclaimer, all the views and the thoughts that are shared today are not designed for your specific circumstances and shouldn't be taken as such. If you need specific advice to suit your needs, please reach out to one of the panel members here today, and I'm sure they can provide you with that specific advice as and when required. So let's get into it. Let's meet our panel of industry thought leaders. First, we have Lisa Garrido from Enigma HR.
Good morning, everybody. Good to be here.
Next, we have Rob Skeen from Oasis Skeen Property Buyers Agents.
Good morning, Adam. Good morning, viewers. Thanks for having me.
And Sam Garashi from MoneyClip Private Wealth.
Hello, Adam, and good morning, everyone.
And we've got Ian McLaughlin from Imperium Accounting and Tax.
Hi, Adam. Welcome, everybody. Thanks for being here today.
And of course, I'm Adam Lyle. I'm from O'Brien Palmer. So I think it goes without saying that the information flow coming out of the federal government and lots of other media circles around JobKeeper and all the other capacity that is being injected into the economy, we can't go any further than going straight to Ian McLaughlin to find out what is going on this week.
Yeah, thanks very much, Adam. So over the last couple of weeks, we've been covering off the extended JobKeeper scheme, which starts after the current scheme. But what I thought I might do today is just talk about some of the changes to the current scheme, which the legislation has now passed for. So basically, the legislation has now been passed for the current scheme, which means that fortnights starting from the 3rd of August onwards, any employee who met the job criteria for JobKeeper as at the 1st of July can now receive the JobKeeper payment. So initially, the employee had to be employed from March, but now they can be employed from the 1st of July. So this means that a number of new eligible employees are going to be able to receive JobKeeper for the August month. Now, these will include full or part-time employees who commenced employment after the 1st of March and were employed with the employer from the 1st of July. It will include casual employees who did not originally meet the set criteria for long-term casual employee, which was 12 months worth of employment as of the 1st of March, but have since met this criteria as at the 1st of July. It will also mean that employees who have since turned 16 to 18 years of age by the 1st of July and meet the independence, or study criteria. And also it will now include employees who have obtained Australian residency as at the 1st of July 2020. So what do people need to do to make sure that they receive this? So it's really important. And, you know, once again, like this is such a fast moving environment that we're living in with JobKeeper, and it's changing daily. And today is actually the cutoff date. And what that means is that employers need to issue their employees that are going to be eligible for JobKeeper under the new criteria with a nomination notice. And this needs to be filled out and given back to the employer by today. Now, from my understanding, the way that it's going to work is that all the single touch payroll information is fed through to the ATO. So when the employer then goes on to lodge the declarations for the month of August, at the beginning of September, those employees should come up as long as the employer's single touch payroll software has been set up correctly. So there's a really important two key dates there. The first one is today, and I know that it's a short time frame, but as again, this legislation is just moving so quickly. And make sure that your single touch payroll software is up to date with the amount of, the new employees and make sure that you have paid them the required amounts by the end of August. So the other thing that I wanted to touch on quickly again was the super amnesty. Now the cutoff date for that is the 7th of September 2020, and basically what that is just a refresh that any unpaid super all the way back to July 1992 to the 31st of March 2018, if you apply to the ATO through the superannuation amnesty, you can now get those superannuation payments deductible. Now, there's just a couple of things to make sure in order for that to happen. So you can't be under an audit currently for the ATO for that unpaid superannuation. And you have to have submitted your application by 11:59 local time on the 7th of September 2020. So they're the two major points from me today, Adam. And now, I'm sorry, I will just also mention that there is a special form for the employees to fill out and the employers to sign off on as well for the new JobKeeper employees that will be eligible from the 1st of July. So make sure that you download that correct form from the ATO because it's different to the one that the original employees would have filled out back in March. So thanks very much.
No worries, Ian. And again, you know, if people don't have a good accountant giving them timely and robust advice about what to do and how to make sure their businesses are getting through these tough times, then they, of course, can reach out to Ian if they're not happy with those current services. I'm going to turn to Rob Skeen because, of course, in this current climate, we need some excitement in the room. And Rob provides that every week. And what's going on with the property sector?
Thank you, Ads. Yes, you can call me Mr. Excitement. Last Saturday, the numbers. Okay, property auction listings were down with 449 homes going under the hammer with a clearance rate of 71%. That's up on last week's 66%. So interesting numbers are going up in the clearance rates, but obviously there are less homes for sale. Now, carrying on our negotiating tips from last week, today I've got 3 tips for you. And the first one is research. Become a superb researcher. Question, do you know who always gets the deal, the best deal from a negotiation? The person who's best informed, of course. Depending upon what you're selling or buying, the more research you do, the more knowledge you'll acquire with the negotiation. Knowledge is power, as I always say each week in my real estate negotiation tips. Now, here's an example. If there's another home for sale in my street, it's just been built, it's a gorgeous looking home, but it's located in the middle of the bend as you come down the hill. Now, as you're driving, you can imagine it'd be quite easy if a car lost control, failing to take the bend, it could quite easily plow into this house. Now, this, especially in wet weather, that's a valid concern, and things like this can be used by buyers to secure a lower price. You know, things like perhaps also too, if you know that the street's being widened, or next door is about to build a new home and it's going to be a year under construction, or perhaps an apartment block's going next door. These are all, you know, valid reasons to help secure a lower price. My second tip today is be careful of time. So time, the longer you spend in a negotiation, the more likely you will fold. When you invest a lot of time with people, you think, well, we'd better do a deal now, or else we've wasted all these hours, days, weeks. I remember a car salesman once told me that some buyers would point out to the car in the middle of the parking lot, surrounded by all the other cars, and he'd ask the salesperson for a test drive. The poor salesman would spend about 20 minutes shifting all the cars around. He's put on all this time that he expects to make a sale, right? He's invested this time. Whoever invests the most time is the one most likely to surrender conditions. Now, some smart car buyers, and I've done this in the past, they get salespeople to bring the cars to their homes. All the buyers have to do is sit at home and wait. The car salesperson uses a heap of time, especially if he has to go back and forth and bring, you know, different types of cars for me to test drive. So be careful. The longer the negotiation goes for, the less chance one side will have of getting the best deal. Make sure it's not your side that's invested in huge chunks of time. Number 3, and this is one of my favorites, is flinch. Flinching. Have you ever heard of that before? Sam, I reckon you'd be good at this. If you receive an offer or a condition in a negotiation and you're excited about it, please don't show it. When you receive that offer, I want you to flinch, right? So you got the offer. I'm sorry. How much do you want for that? And you notice I'm not smiling, right? It's not flinching with a smile because they'll know you're joking. So you do that seriously. Flinching will help you improve your offer almost immediately. Flinching a second time could improve it even more. Now, buyers and sellers never accept your first offer. And when you flinch, chances are you will receive a second or third offer. They're my tips of the week. Thanks, guys.
That's amazing, Rob. And, you know, it's so valuable, and it shows your experience over many years. And thank you for sharing that with the viewers. I'm going to turn to the markets now and also get some insight as to what's happening from Sam Qureshi.
Okay, thank you very much, Adam. So I'll cover off on both the interest rates and the markets. Firstly, in terms of interest rates and banking, there hasn't been a lot of changes since a week ago. So the rates are still in those, variable rates are in that mid-twos, fixed rates are still cheaper, and so on. And I thought today I might actually take the opportunity to look at maybe something slightly different for us to refer back to, and that is to share with you what we look at from a scientific perspective of what the rates are doing. You'll see that come through shortly. Essentially, the ASX 30-day bank cash rate is how the market trades the interest rates. And as you can see currently, it's sitting, we're at 0.25% with the cash rate. Next move is down to 0. And essentially, the expectation in the market for a long period of time, all the way through to December 21, is for it to go nowhere. So right now, the rates seem to be quite steady as they go. And I guess we'll continue to see that happen for some time longer, which is good. What we are seeing though is the bank service levels are very much out of the window. Yet you can't get much joy from getting any quick answers from the banks. So you just got to be patient and also mindful of signing anything that is unconditional contract. Obviously, something that Rob might refer to as part of the property deal. Turning to the market, markets fell only a very small amount last week. They're almost unmoved. The week before we were up 0.2, now we're down 0.2. So basically it's gone nowhere. We've started the week just slightly up at this point in time. Now, interestingly enough, US markets surpassed the pre-COVID market number last week. So that's a bit mind-boggling. A couple of things to be mindful of. Firstly, if Biden gets in and he has less business-friendly policies, so we may see that some re-rating downwards of that market in the US. And of course, the second wave is also is going to have some impact. Now, one of the things we are seeing is, and this is a measure of value in the stock market, a ratio called price to earnings or price to profit ratio. Right now, it is trading at a high. And so high that it was only this high pre-tech boom, where we had the tech wreck, pre-GFC, where we had the GFC, and pre-1929 depression time. So everything is basically priced to perfection right now, and which is why any inkling, will move the markets so much as it goes. Now, of course, geopolitically, China also throws another piece of mud at Australia at the moment, obviously due to the proxy wars with the US. And that affects, at the moment, going to affect our wine industry. So, and again, that puts the risk to Australia. Our wine industry is worth about, I believe, about $3 billion. $1 billion of that gets exported to China, which is pretty huge. From a reporting perspective, we've had 2/3 of the companies report. I have to say that I am quite surprised by some better than expected results at the moment. I just hope that this is not a window dressing and it doesn't come crashing down, in the next half or next year or so. And, if I was in those companies' shoes, I guess I would do my best to hang in there for as long as I can for survival. And obviously good news is better than hanging out in bad news. Dividends have been reduced through these reporting season. Some companies have managed to maintain close to or near that what was originally promised, which is good. On the banks are very big dividend payers. CBA and ANZ surprised in the positive, whilst NAB, Westpac and Bendigo Adelaide Bank have gone the other way, essentially. This week is a very interesting week because we have two beneficiaries of COVID, Fortescue Metal and Afterpay report. They both have done unbelievably well since March close. So be good to see what they're going to be reporting. Know that there will be positive numbers coming out of those guys. Now, a couple of things. We had a major milestone in all companies around the world last week. Now, Apple surpassed the value of $2 trillion of the value for the first time ever. First company to have ever done that. And obviously, this is on the back of potentially less sales going forward and so on. But the fact that there'll be more tech adoption going forward. Just to put it in context, Apple now sits above Italy in their GDP. So Italy is the 8th biggest economy in the world with 1.99 billion in GDP, and Apple sits above them. Australia sits about 1.4 billion. So Apple well and surely can buy everything in Australia for a year with the sales that it makes. So we're interested to have as a stat. And lastly, I continue to encourage everyone to turn the way that you manage your money on its head. That is, instead of earning, spending, and then saving, to change that to earning, savings, and then spend. And this will definitely bring you more financial freedom. And that's it for me till next week. Thank you.
Thanks, Sam. As always, pretty deep and meaningful, and we really do appreciate that. Speaking of deep and meaningful, how can we go past the lovely Lisa Garrido, who cares about people the most, and now more than ever we need to touch out and make sure that our people are happy. So Lisa, what have you got for us this week?
Thanks, Adam, and thanks, Sammy G. Okay, so on the back of last week's discussion, and the inquiries from our viewers, what I am going to present today are 8 tips that managers can do to try and maintain and support mental health and well-being for their staff. And this is not something that I've come up with myself. There is an article in Harvard Business Review that I thought encapsulates exactly what we've been talking about in the last few weeks. And of course, as we navigate through the transitional periods in the coming months and possibly in the next year or so, from World Health, WHO saying that we will be over this pandemic in 2 years. Something that Bernie can discuss next week is the rising claims in terms of workers' comp, claims in terms of employees struggling with anxiety, depression, burnout, trauma, and even post-traumatic stress disorder. So what can managers do about this? And the article that I've read highlights 8 ways. First way is be vulnerable as managers. We are normalizing mental health issues as the new norm. So there is going to be a level of discomfort experienced by all already in the last few months and in the coming months. So if you, as a manager, you try and decrease the stigma by actually also talking about your own experiences and the struggles that you have and share those experiences with your teams, you're basically being honest about your own situation and your own struggles, and it allows for an open door situation where employees can actually talk about their struggles and their mental health challenges on their own. A company, a biotech firm, Roche, Genentech, actually have a team of mental health champions. And what the team have done is they've opened an intranet campaign called Let's Talk. And in that internet campaign, they've actually recorded videos of the team members talking about their experiences and the solutions they come up with to deal with some of the issues and struggles that they've come up with. Isn't that a brilliant initiative? Transparency is key. Second tip, model healthy behaviors. So don't just say to your team members that you support mental health. Show them that you're supporting that yourself, perhaps in little ways, like talk about or share about the ways that you would get up in the middle of the day or whilst you're working and stretching and having a break and not continuously working without having a break. Talk about maybe some of the therapies that you actually take in, whether you go to acupuncturists, you take supplementation, or meditation and yoga. So start talking about these behaviors and model them yourselves as leaders. Third point, build a culture of connection through regular check-ins. So intentionally checking in on your team members or your direct reports is more critical than ever. And I've been talking about this for weeks. So a study with a company called Qualtrics and SAP has shown that nearly 40% of global employees said that no one at their company asked them if they were doing okay. Those respondents were 38% of them were more likely experiencing a mental health issue. So go beyond the how are you? Ask how are you really, right? So do those check-ins, really listen to what they're saying, encourage them to ask questions and discuss it with you. So what that would mean is you need to create the space and time to do this. You are in a leadership or management position. When someone shares to you that they're struggling, you won't always have the solution because you're not the expert in mental health and well-being. So be open to that, listen to it, and then find out who can help them, right? Be the person that they can approach so that you can then help them find solutions to it. Fourth, offer flexibility and be inclusive. We've talked about this already in terms of flexible working hours, flexible arrangements to report to work, perhaps some different shifts. Be inclusive in those discussions. Talk to your team members about it. See if everybody's happy about it. Don't make assumptions that they're okay, and don't make assumptions of what your direct reports need. Talk to them about it and be flexible with your solutions. Communicate more than you think you need to is the other tip. Remove stress where possible by setting expectations about workloads. I talk about this consistently. Prioritizing what must get done and acknowledging that they've actually done it, rather than just directing them to achieve certain KPIs. Talk about productivity rather than an output, rather than just doing the job. So that's a few tips from that article. And what else can you do to do this as leaders? Invest in training your staff on how to deal with workplace mental health issues. There's a plethora of advisors that we have access to as HR managers. So contact us and we can introduce you to people that can really help. Secondly, modify the policies and practices. We already talked about this. To reduce stress for everybody, be generous and flexible as possibly as you can in terms of making sure it's a commercial decision to do that. Take a closer look at how you're conducting performance reviews, because that already in itself is a stressful process. And lastly, continue to measure the success. If it's working and you're reducing the stress in the workplace, evaluate that with your teams and continue to do more of the same. So those are some tips that we work out through this article, and I'm there as well. Any more questions with that, guys? Again, as I said to our viewers, there are so many professionals who are experts in this area that can help. So ask for help. Don't sit there doing nothing. That's it from me, Adam.
Thanks, Lisa, and thank you for introducing us to that fantastic new language that we got throughout that. Unfortunately, your internet connection was making a new pidgin English. I'm not quite sure what language it was, but it was fantastic. We got the message though, and that is ask for help and don't leave it too late, which is a great segue to what I'd like to cover today. You know, I've been banging on about a COVID survival plan for months now, and a lot of people have listened to that. Some people haven't. And whether you have or you haven't, it's not too late to still do it. Because guess what? COVID's not going away tomorrow. Second wave has come in Australia. It's coming off. There could be a third wave. Nothing's going to happen and nothing's going to go away until such time as there is a vaccine. And even so, is the vaccine the right vaccine? So we do need to think about a survival plan. And many survival plans are centered around that terminology called COVID safe. And any business that is out there now that has some kind of public interaction they usually will have procedures in place to be COVID safe. Other businesses may not necessarily have thought about that. And there's going to be a whole pile of different variations depending on the size and the location and the industry type and the capacity of the business. But here I'd like to share with you 5 common themes of what it is that should be the underlying foundations of a COVID survival plan. Number 1, calm. Initiate calmness to your situation and your decisions. The calmer you are, the more in control you present, not only to your team, but to people outside, the more believable and more credible you'll be. Number 2, understand. Understand your situation and the impact that COVID is having on your business and your people. If you have them all on the same page as you, it's going to be so much easier to move that mountain. Number 3, stakeholders. Know who your stakeholders are and maintain their confidence. Stakeholders don't always have to be external. They can be internal. They can be your own shareholders. They can be, your husband or your wife, your girlfriend or your boyfriend. It can be people that are supporting you through this time. And of course, the external stakeholders, namely your landlord, your lenders, your bankers, and other people like that. Number 4 is engage. Be open and transparent with all your stakeholders, lenders, and your creditors. COVID is not an excuse not to pay your bills, but it is an ability to help people understand what you're going through. It gives you the right to have a dialogue with your creditors. It gives you the right to have that dialogue with your lender and any other stakeholder that's going to have an impact on your business. But you need to be open and transparent about that. You need to follow it up with action. Number 5 is decide. Be decisive and have conviction with your decisions. Don't do the wishy-washy, I'll try this for a couple of weeks and then I'll do something else. Make a decision, make sure it complies with your overall business plan. Include your COVID survival plan into your overall strategy, and you'll be amazed how much more clarity you'll get. There's lots of people that can help. There are business coaches, there are great accountants like we've got Ian here today. Other financial advisors, HR advisors like Lisa and Sam. Don't think that it's too late to ask, because the earlier you ask for assistance or advice, the more options are going to be available to enhance your survival. I hope that's helped. I think that's all. I don't have any questions that have popped up on the feed. Has anyone got any questions of any of the panelists today?
I do. I've got a question for Rob, obviously to do with the tips that you actually provided, Rob. And you're talking about, don't pinch and so on. So can you just show us what is your negotiation phase looks like? And what about your serious phase?
Okay, here we go. How's that for you?
What about your happy face during negotiation? What about your happy face during negotiation?
Good happy face. Here you go.
I thought, Rob, that you were an Academy Award winner with that flinching face you had. I'm so sorry, guys, or viewers, if I was breaking up. I don't know why. However, if you want more information on what managers can do, I'm more than happy to share that with you. And it's very much aligned with what Adam was saying in terms of be prepared for it. And my real message, as Adam said, ask for help, but invest in training your teams to actually be able to deal with this if they are in leadership or management roles.
That's right.
Can I just say with flinching too, like start out small, try it everywhere you go, whether in a retail store, buying cars, whatever it is, give it a go, and you'll be amazed at how much it works.
All right, okay, I'm gonna try now. I'm gonna go. See, there you go.
We'll need you to do blue steel, Rob.
I'm terrible at that.
Great.
Single.
Folks, I think that's a wrap. I think that's where we're going to leave it there today. Thank you very much for listening. Of course, I'd like to make sure that you're aware of how to contact. And if you notice that on the screen here, on each side of the presenters is their name and the firm that they're from. So if everyone points to where that is, you can make sure you can look up. And of course, we're on LinkedIn, we're on Facebook, and we're all accessible and available for any of the viewers today. Mondays at 12 o'clock. We'll see you next week. Look forward to having you, and thanks very much to our presenters today.
Thank you. I'm looking forward to it.
See you guys soon. Bye-bye.